Have you ever wondered what really happens when HMRC comes knocking? You might just think it's a letter in the post, but for many taxpayers, it can be stressful, confusing, and even financially damaging if handled the wrong way. Hi, I'm Jamal Khan, CEO of Churchill Tax Advisors, and today I'm going to take you inside a real HMRC tax investigation step by step so you know exactly what to expect, how to protect yourself, and how to respond professionally without panicking. Step 1. The letter, initial contact from HMRC. Every HMRC investigation starts with a letter. This is usually sent via post, sometimes followed up by email or a call. It can feel alarming. Seeing HMRC on a letterhead triggers fear in many taxpayers, but the truth is receiving a letter doesn't necessarily mean you've done anything wrong. Sometimes it's triggered by simple things like mismatched income, late filings, or unusual expense claims. HMRC's sophisticated AI system called Connect can scan millions of transactions and cross-references your income with banks, employers, property records, and even social media activity. The key here is never ignore it. Responding promptly shows HMRC you are cooperative and organized. Ignoring the letter can escalate the situation, leading to more intense scrutiny and potential penalties. Step 2. Information requests. Once HMRC decides to investigate further, they'll request documentation. This may include your bank statements, your receipts and invoices, expense claims, contracts, or agreements. This stage is all about transparency and evidence. HMRC wants to see that your accounts match your declarations. Many people underestimate the importance of this step, thinking they can explain verbally later. But in reality, missing or incomplete records can trigger further investigation. For example, I recently worked with a client who ran a small consulting business. HMRC asked for expense receipts over the last 3 years. Initially, they didn't provide them in order, and it caused unnecessary stress. Once we organized the documentation and submitted it professionally, HMRC concluded the investigation quickly. No penalties applied. This is why having clear, organized records from day one is crucial. It's not just about compliance, it's about minimizing stress and potential financial risk. Step 3. The interview or meeting. After reviewing documents, HMRC may request a meeting, either in person or at one of their offices or over the phone. These interviews are formal but not meant to intimidate you. During the interview, HMRC will ask detailed questions about your income sources, expenses claimed, business operations, lifestyle compared to declared income. It is essential to answer truthfully, clearly, and concisely, and to never guess or speculate. Many taxpayers make the mistake of trying to explain things without preparation, which can inadvertently create confusion or suggest inconsistencies. This is where expert guidance becomes invaluable. Having a tax advisor represent you or guide you ensures the conversation is professional, accurate, and minimizes risk of errors. At Churchill Tax Advisors, we've helped hundreds of clients navigate these interviews calmly, reducing both stress and the chance of additional inquiries. Step 4. Analysis and assessment. Behind the scenes, HMRC uses powerful data analytics to cross-check the information you've submitted. They compare declared income versus bank deposits, claimed expenses versus industry averages, lifestyle indicators versus reported income. For instance, if a self-employed consultant reports £50,000 in income but claims £40,000 in expenses, HMRC will flag this as unusual. Similarly, if someone declares average income but posts luxury holidays on social media, HMRC can investigate. This process can feel intimidating, but it's just HMRC doing their due diligence. Clear, well-documented records, organized invoices, and professional tax advice dramatically increases your chance of a smooth resolution. Step 5. Outcome. Finally, HMRC reaches an outcome. This could be no further action if everything checks out. Minor adjustments to your tax return for errors, or a formal inquiry if discrepancies are found. Even if adjustments are required, handling it professionally can minimize fines and penalties. This is why engaging a professional tax advisor early is so important. It's not just about compliance, it's about protecting finances and your reputation. The most important takeaway is simple: never panic, never ignore HMRC, and always stay organized. Maintain clear records, respond promptly, and get professional guidance when needed. HMRC investigations are common, but most are manageable with the right preparation.